Playing the Money Smart game, Bank on It, is easy. In a moment, I will explain how the navigation bar works. But first, you should know that some of the screens in Bank on It have audio. Make sure your computer's volume is not muted before continuing. After completing this lesson, you will be able to identify two major types of insured financial institutions, identify 5 reasons to use a bank, compare and contrast cost of accounts with cost of check cashing services, describe the main functions of branch personnel, customer service representative, teller, loan officer, and branch manager. Describe attributes of 2 types of deposit accounts. Compare and contrast risk of investment accounts versus deposit accounts. Describe the steps involved in opening and maintaining an account. List additional bank services that come with deposit accounts. Describe the privacy-related decisions that new account customers must make. Welcome to Bank on It. By taking this lesson, you are taking an important first step towards building a better financial future for you and your family. It all starts with understanding the basics of personal finances. The Bank on It lesson provides an overview of banking services. It is designed to help you build a positive relationship with financial institutions such as banks, thrifts, and credit unions. Click on the die to roll it, or press the Enter key. This section explains what banks, credit unions, and thrifts are and some of the benefits of keeping your money in these insured financial institutions. Insured financial institutions. Insured financial institutions operate under federal and state laws and regulations. They accept deposits, make loans, pay checks, and provide other financial services. There are 2 major types of institutions: banks and thrifts. Credit unions. Unlike banks, credit unions are owned by their members. You must become a member of a credit union to save or borrow money there. In this section, you will learn about the federal agencies that insure your deposits. Insured financial institutions continued. Your deposits in banks and thrifts are guaranteed by the Federal Deposit Insurance Corporation, FDIC. This means that if the bank were to fail, your money up to the insured amount would be returned to you by the FDIC. You can verify if the FDIC insures a bank by visiting www.fdic.gov. Your deposits in most credit unions are insured by the National Credit Union Administration, NCUA. The deposit insurance rules are the same at NCUA-insured credit unions as they are at FDIC-insured banks. To make things simple, we will use the term bank throughout this lesson to refer to all insured financial institutions. Financial tip. The FDIC has an online tool called the Electronic Deposit Insurance Estimator, EDIE. It lets you calculate the insurance coverage of your accounts at each FDIC-insured institution. You can find EDIE at the following website, www.myfdicinsurance.gov. Click on the die to roll it, or press the Enter key. Do you keep your money in a bank? Think of a couple reasons for keeping your money in a bank before clicking the forward button or pressing the Enter key to continue. People keep their money in banks for many reasons. Select each person on your screen to hear why they keep their money in a bank. When you are done, click the forward button or press the Enter key to continue.
I keep my money in the bank for many reasons, but security is the main one. The FDIC insures deposits up to the maximum amount allowed by law. This means that if for some reason my bank closes and cannot give me the money I had in my account, the FDIC will return the money to me. Also, federal consumer protection laws protect me when I do business with the bank. I can contact the FDIC for assistance if I can't resolve a dispute with my bank.
I started keeping my money in a bank because I want to build a solid financial future. Opening an account can help me build a relationship with a bank that can be important for accessing affordable credit. If I ever need a car, home, or small business loan, I'll be glad I established a good relationship with my bank. I opened a bank account to save money. Using a bank is much cheaper than when I used to cash my paychecks at check cashing services.
Keeping money in a bank is convenient. I can get cash out of my bank account whenever I want by using an ATM. ATMs are everywhere, and most of them can be used 24 hours a day, 7 days a week. I can also buy things using my debit card if I don't have cash on me. My checking account includes services like direct deposit that make my life easier. My paycheck is electronically deposited into my bank account, and the funds are available sooner than when I used to deposit checks in person.
I keep my money in a bank for safekeeping. If I kept my money at home, I'd be worried that something might happen to it. It could get lost or stolen, or worst of all, destroyed in a fire.
Do you use check cashing services? Many people do not realize how much money they can save by opening a bank account. Read Tara's story and then click the forward button or press the enter key to continue. Tara's story, cost of check cashing services. Before she opened a bank account, Tara used to cash her weekly paycheck at Fees for Cash, a check cashing service. Fees for Cash charged Tara $10 each time she cashed a paycheck. Since she usually receives 4 paychecks a month, this amounted to $40 in monthly check cashing fees. Today, Tara has a free, low-cost checking account and can deposit her paychecks into her account at no cost. She monitors her balance to avoid overdrawing her account or paying other fees. Opening a checking account has saved Tara $480 a year in check cashing fees. Let's check your knowledge with a couple knowledge check questions. Click on the die to roll it, or press the enter key. When you visit a bank, you will meet employees who can help you with different banking services. Click the bank employees on your screen to understand their job duties and whom you should speak to when you go to the bank. When you are done, click the forward button or press the enter key to return to the game board. Tour of a bank. Customer service representative. The customer service representative can help you open your account, explain bank services, answer general questions, provide written information explaining the bank products, refer you to a person who can help you further. Bank teller. The teller is often your main contact at the bank. The teller stands behind a counter and can deposit your money, cash your checks, answer questions, refer you to the person who can help you with other bank services. Loan officer. The loan officer can take applications for loans offered at the bank, answer your questions, provide written information explaining loan products, help you fill out a loan application. Branch manager. The branch manager supervises all bank operations that take place at the branch and helps fix problems that other bank employees are unable to solve. Click the bank employees on your screen to understand their job duties and whom you should speak to when you go to the bank. Click on the die to roll it, or press the enter key. You have received a quiz card to test your knowledge. Click on the die to roll it, or press the enter key. When a financial institution agrees to lend you money, they may want some assurance that you will pay them back. A loan is often secured by collateral or a guarantee. Insured deposit accounts. Checking account. A checking account allows you to pay bills and make purchases with the money you deposited in the account. You can access your funds by writing a check, using your debit card, through online bill pay, or at an automated teller machine, ATM. Savings account. A savings account earns interest. Interest is a percentage of your balance that the bank pays you for keeping your money at that bank. Generally, a savings account is not intended to be used like a checking account for everyday transactions, as a fee may be charged for more than a certain number of withdrawals a month. A savings account is a good place to save for your goals. Many banks also offer non-deposit accounts or products that are not insured by the FDIC. It is a good idea to build an emergency savings fund in an insured bank account before investing. That way, you know the money you may need for an emergency or job loss will be there if you need it. Let's check your knowledge with a knowledge check question. Let's check your knowledge with a knowledge check question. Before opening an account, it is very important to shop around for the bank and bank account that best fits your needs. Choosing a bank and bank account checklist. When looking for a bank and a bank account, take the Choosing a Bank and Bank Account checklist with you. The questions can help you as you comparison shop to find an account that is right for you. Click on the die to roll it, or press the Enter key. Once you have decided what kind of bank and bank account you need, there are 4 steps to opening and maintaining a bank account. The first step is to open the account. The second step is to make deposits and withdrawals. The third step is to keep track of all the money that is deposited into or is taken out of the account. And the final step is to keep track of your balance. Click the Forward button or press the Enter. In this section, you will learn how to open a bank account. Imagine you have shopped around and decided to open an account with State Bank. You sit down with a customer service representative.
Welcome to State Bank. How can I help you today?
I'd like to open a bank account.
Great. Are you interested in a checking account or a savings account?
I'd like to open a checking account.
I can certainly help you with that. First, I'll tell you about the different checking accounts that State Bank offers and explain the various account fees. Then we'll complete the account verification process. Did you bring a photo ID, such as your driver's license, with you today?
I did. Here's my driver's license.
Thank you. I will also need your Social Security number or your individual taxpayer identification number.
When you go to open a bank account, the bank customer service representative asks for your identification to complete the new account opening process. Opening a bank account. Banks complete the account verification process to make sure you are who you say you are. The bank will verify your identity through your photo identification and either your Social Security number, SSN, or your individual taxpayer identification number, ITIN. The bank may also ask you for another piece of identification. Are able under the law to open a bank account. Meet the bank's own criteria for opening a new account. The bank may not want to risk having you as a customer if you have not been a good banking customer in the past. The bank may review your history of using checking accounts through companies such as Telecheck or Check Systems. The bank may also run a full credit report. Click the Forward button or press the Enter key to continue. Opening a bank account continued. If you are not a U.S. citizen, some banks may accept other forms of photo identification, such as a matricular consular card, resident alien card, green card, passport. Ask the bank what type of identification you need to open an account. If you are unable to open a checking or savings account because you have had trouble managing a bank account in the past, you may be eligible for second chance checking programs. Opening a bank account continued. If you are unable to open an account, ask whether you are eligible for any second chance checking programs. These programs may allow you to open a checking account after meeting certain requirements, such as completing a financial education workshop. Ask your local financial institution and/or any reputable credit counseling agency if there are any programs in your area. Consider just opening a savings account if you have had trouble managing a checking account in the past. Check with other financial institutions to see if you meet their eligibility criteria to open an account. Click on the die to roll it or press the Enter key. You have received a quiz card to test your knowledge. You have received another quiz card. Click on the die to roll it or press the Enter key. Making deposits and withdrawals is the second step to opening and maintaining a bank account. In this section, you will learn what these terms mean.
Okay, we completed the account verification process and I have opened a checking account for you. How much will your opening deposit be today?
I brought $300 in cash with me today, and I'd like to deposit all of it.
Of course, but I'll need you to fill out a deposit slip first.
A deposit is money you add to your account. Deposits. A deposit is money you add to your account. Money can be deposited via direct deposit at an ATM or at a bank teller. If you are depositing money in a branch, you fill out a deposit slip to tell the bank how much money you are adding to your account. Depending on what you deposit at a branch or ATM, you may not have immediate use of all the funds. Cash is usually available immediately. Checks may be partially available. The bank may allow up to a certain amount of the deposited check to be withdrawn immediately and hold the rest for a day or two, or perhaps longer, while the check clears, meaning the funds are all available for withdrawal. When you make a deposit, you may ask the bank when you can use the money you deposited. Direct deposit. With direct deposit, your paycheck or benefit check is electronically transferred and directly deposited into your account. The amount of money is immediately available. Some banks will waive monthly fees if direct deposit is used.
Since you deposited cash today, that money will be available immediately. Your opening balance is $300.
Great, thank you.
You're welcome. I've noted the opening balance for you here in your check register.
It is important to always keep track of your account balance. Balance. The balance is the amount of money you have in your bank account. You always need to know how much is in your account so you will not try to take out more money than you have. If you overdraw your checking account, you will be charged a fee. We will talk about these fees later in this lesson. Click. A withdrawal is money you take out of your account. Be sure to keep track of the money you deposit into or take out of the account so you don't spend more than you have in the account. Withdrawals. When you make a withdrawal, you are taking money out of your bank account. You can make a withdrawal by using your debit card, writing a check, giving a teller a withdrawal slip, or using an ATM. A withdrawal slip looks similar to a deposit slip, except you are taking money out of rather than adding money to your account. Let's check your knowledge with a couple knowledge check questions. Click on the die to roll it or press the Enter key. Recording interest and fees is the third step to opening and maintaining a bank account.
How much interest will my checking account earn each month?
Unfortunately, checking accounts at State Bank do not earn interest. This is true at most banks. However, we'd be happy to open a savings account for you today so you can earn interest.
One of the advantages of having a deposit account is the interest you earn. Interest. Most checking accounts do not pay interest. Savings accounts generally earn interest. Ask your customer service representative how much interest, if any, your account will earn.
You explained this earlier, but could you go over the fees for my checking account one more time? I want to make sure I understood everything correctly.
Of course. You'll be charged a monthly maintenance fee of $5 for keeping your account open. You can avoid this by having your income direct deposited into your checking account by your employer. This disclosure explains the other fees associated with your bank account. Let's go over it together.
Financial institutions charge you fees for different services. A bank must provide you a disclosure of all fees that could be charged before you open the account. Be sure to keep this fee schedule and monitor all mail from your bank for any changes. Fees. Financial institutions charge you fees for different services. Monthly maintenance fees. You might be charged a monthly maintenance fee for keeping your account open. Some financial institutions waive this fee if you have a regular direct deposit made, for example, once per month, or if you keep a minimum balance in your checking or savings account. Overdraft fees. You might also be charged a fee if you overdraw your account. You can overdraw your account by bouncing a check, withdrawing from an ATM before a check clears, or using a debit card to buy something that costs more than the amount you have in your account. Click on the die to roll it or press the Enter key. You have received a quiz card to test your knowledge. Click on the die to roll it or press the Enter key. The fourth and final step to opening and maintaining a bank account is to keep track of your balance. The best way to avoid paying overdraft fees is to record all transactions and keep track of your balance. Let's review the check register on your screen to see how the different transactions in our scenario affected your checking account balance. You deposited $300 when you opened the checking account, so the opening balance is $300. Next, you deposited a $1,200 paycheck. Your new balance is $1,500 because $300 plus $1,200 equals $1,500. Then you made 2 withdrawals. After writing a $35 check, your balance was $1,465. The $20 ATM withdrawal further reduced your balance to $1,445. Finally, State Bank charges a $5 monthly maintenance fee. If you subtract this month's maintenance fee, you are left with a balance of $1,440. Click the Forward button or press the Enter key to continue. You have received a knowledge check question. Click on the die to roll it or press the Enter key. Banks provide additional services with some deposit accounts and may charge a fee for these services. It is important to ask about fees before signing up for a service and to keep track of any fees that are charged. In this section, you will learn about the most common services that banks offer. Click each bank service to learn more. When you are done, click the Forward button or press the Enter key to continue. Additional bank services. Money transfer. A money transfer sends money electronically from one bank to another. Most banks can transfer money to banks that are outside the U.S. Remittance. A remittance is a specific type of money transfer that goes to a bank or a person in another country. When sending a remittance, ask about the currency exchange rate and all the fees charged. Remember, the bank receiving the remittance may also charge a fee to the receiver of the funds. ATM. An ATM is a kiosk where you can deposit, withdraw, or transfer money from one account to another 24 hours a day. Remember, there may be a fee involved for some of these ATM services. Electronic banking. Most banks provide electronic banking services. These allow you to access your account and conduct basic banking services over the telephone using a computer or on a smartphone. Many provide these services for free, while others may charge a fee. The services may allow you to check account balances, transfer money between accounts, obtain account history, such as most recent deposits or withdrawals, stop payment on a check, obtain information on branch hours or other information, report a lost, stolen, or damaged card. Money order. A money order is similar to a check. It is used to pay bills or make purchases when cash is not accepted. Many businesses sell money orders for a fee. If you need to use a money order, it is best to shop around for the best price. Loan. A loan is money you borrow from a bank with a written promise to pay it back later. Banks charge you fees and interest on loans. Interest is the money you pay to borrow money, and it is added to the total amount you must pay back. Debit card. A debit card is a plastic card, sometimes called a check card. The debit card is tied to your checking account and allows you to pay for goods and services at stores and other businesses that accept MasterCard or Visa credit cards, as well as other credit cards. Click the link below for an accessible version of this section. Let's check your knowledge with a couple knowledge check questions. Click on the die to roll it, or press the Enter key. You have probably received privacy notices from banks and other financial companies in the mail. It is important to read the privacy statement when you receive it. This section explains privacy notices and what you can do to limit the amount of your personal financial information that is shared with other financial institutions. Privacy notices. Federal law requires financial institutions to keep your personal financial information private. The general public does not have access to your personal financial information. However, financial institutions may share your information with other companies to offer you other products and services. You will receive an initial privacy notice when you open your bank account and every year thereafter. These notices explain what personal financial information the company collects, whether the company intends to share your personal financial information with other companies, what you can do if the company intends to share your personal financial information to limit some of that sharing, how the company protects your personal financial information. Click the Forward button or press the Enter key to continue. Not all financial institutions will share information. If your financial institution does share information, federal privacy laws give you the right to stop or opt out of some sharing of your personal financial information. Opting out. If you want to opt out of certain information sharing by your bank, follow the instructions in the notice, and if necessary, shop around for a financial institution with the privacy policy you want. If you did not opt out the first time you received a privacy notice from a financial institution, it is not too late. You can always change your mind and opt out of certain information sharing. Contact your financial institution and ask for instructions on how to opt out. You may also receive pre-screened offers of credit and insurance based on information in your credit report. To opt out of receiving pre-screened offers of credit or insurance based on information in your credit report, call 1-888-5-OPT-OUT, 567-8688. Visit the following website, www.optoutprescreen.com. Let's check your knowledge with a knowledge check question. Congratulations! You have completed the Bank On It lesson. Using the information you have learned in this lesson, you should be able to begin using the services of a bank. In closing, remember several key points. Building a positive relationship with a bank can help you establish a record of paying bills, save money, and obtain affordable credit. Shopping around can help you find the bank and account that offers the best services and fees for your needs. Recording all transactions and keeping track of your account balance is the best way to avoid overdraft fees.